how to trade with multiple time frame analysis. That's what we are going to talk about today, as this is probably one of the most important concepts a trader needs to understand on their journey to becoming a profitable trader. This can be used on all strategies out there. I know a lot of retail traders like trading with technical analysis. Supply and demand is the main strategy that I trade with. So we are going to primarily talk about that. But if you trade support and resistance or other chart patterns or indicators, multiple time frame analysis will help us determine if we should be looking for buying opportunities or selling opportunities, or maybe staying away from the markets altogether. I mean, I personally trade 35 different markets, but I don't actively trade 35 every single day. I will go to a scan and I'll end up only being trading maybe 10, maybe 5 on my watch list for the day because I want to cherry pick my zones. That's not a bad thing. People think, oh, you're cherry picking your trades. You should be cherry picking your trades. You should be picking your best quality trade setups and not C quality, D quality, B quality trade setups. You should be taking A to A plus trade setups, as those have the highest probability for your trade being a winning trade. Okay, so multiple time frame analysis can help us with this on all different time frames, depending if you're a day trader or a swing trader, different types of time frames, which will help us determine if we should be looking for buying opportunities, selling opportunities, and will also help us determine the trend. That is a completely different video that we could talk about, but we will also touch on that briefly throughout this. So let's get into it. This is the first thing that I do on all my charts. I start with the higher time frame, and if I don't like it, I skip it and move on. So a good example that I like to share with people when first starting to understand multiple time frame analysis, say you are in an airplane 50,000 feet up. This is you looking outside the window with a big smiley face, all happy. You are flying to your next destination. You look outside your window. What are you going to see? You are going to see the ocean. You might see some clouds, and you might see some mountains, but you're not going to see any streets. You aren't going to see people. You aren't really going to see buildings. You are going to see those main three things because they are very large. This is our higher time frame. All right. And then if you go down to say 10,000 feet or 5,000, what are you going to start seeing? You are going to start seeing buildings. You are going to start seeing the highways, maybe some cars passing by. You're going to start seeing maybe some trees, right? Maybe some smaller aircraft carriers. So those are the smaller time frames. And then once you get ground level, that's when you start seeing, the people walking down the street, the traffic lights switching on and off. You can see the flags blowing. So that's like our really low time frame, the 1 minute, the 5 minute, the nitty gritty stuff. All right. And that's basically how we want to approach our trading. Multiple time frame. We want to start with the higher time frame and understand what price is doing on the higher time frame and help us determine whether we should be looking for buying opportunities, selling opportunities, maybe staying out of the market. And then secondly, determining the trend, but we will talk about that later. So this is very simple. I mean, if you grab a 3-year-old kid, it's not rocket scientist stuff. You grab a 3-year-old kid and you ask them, where do you think buyers are going to step into the market versus sellers? Okay. Where is price going to go up and down? They're probably going to say buyers will step in down here and sellers will step in up here. And you ask them, what is their logic? Well, they will tell you most likely, well, the last 6, 7 times prices have been up here, we have seen sellers come into the market. So it probably will go down. And then same thing for buying. The last 5, 6, 7, 8 times it's been all down here. Buyers have stepped in. So why would you be looking for buying opportunities if you know the last 6, 7 times prices have gone up into this area, prices have begun to sell off? It's a pretty stupid thing in my opinion. So in this case, if we know prices have came in the last 6, 7 times, well then we should be looking for selling opportunities and not buying opportunities, right? Same thing down here. If price makes its way down here, well, we can clearly see the last 5, 6, 7 times buyers have stepped into the market. So we should be looking for buying opportunities if price comes back down here, because the last 7, 8 times buyers have stepped in. It's very logical. Okay, very simple. Let's keep going. A great example that I could share is not Euro USD, is USD Mexican, because if we scroll out on the weekly time frame, where do you see buyers stepping in? Here on the weekly time frame. Well, we see buyers anytime that prices are down here, buyers seem to be stepping in. And this is all what multiple time frame analysis is we are trying to identify where the big money, where buyers or sellers are stepping in consistently, right? Where they see value. And we can clearly see the last 6 times prices have been down here. Well, we want to be looking for buying opportunities and then time our entry when prices come back down in there on smaller time frames. So if we go back to that Aussie New Zealand, we said, hey, we really like this area for buying opportunities and this area for selling opportunities, right? So now we know that we want to be looking for selling opportunities. However you want to trade based off of your methodology, your trading strategy, you can now know that, hey, prices are up inside a monthly area of supply. Maybe I want to be looking for selling opportunities on my daily or my 4-hour time frame because we have that extra confirmation, extra correlation, whatever you want to call it, that's on your side. People might think you're crazy. Prices have been rallying up nonstop for the last year, right? They're thinking you're on crack cocaine. And you're like, nobody. Understand where price is on the higher time frame. Those are your friends trying to buy all up in here on the daily time frame, thinking, oh, it's going to the moon, you know? It's going to the moon. But you understand multiple time frame. Well, the last 6, 7 times it's been up there. Sellers have came in. It's already made its move. The time to get long was down here on this price action. All right. So another example, we're here on my watch list, and this has been my watch list for the last week regarding the Dow Jones. Understanding trend, understanding kind of the impulse correction moves. Clearly, this whole year we've been in a downtrend of 2022. What I was doing here was I was measuring the average impulse wave to the average correction, right? So if we're in a downtrend, the impulse waves are going to be longer than the correction moves, right? So I was curious to see like, hey, what's the average impulse wave and correction? And I figured out that the average impulse wave to the downside was 12.5%. That's just the average. Could be more, could be less. And then the average correction move was 11.5% over here. Okay, so prices now just made a 12% correction move. I'm thinking in my head, well, I think we're going to have a poor economy. Plus, the last 7 corrections, 6 corrections have averaged 11.5%, could be 8%, somewhere 15%, like this one, right? Well, based off of the last 5 corrections, we have made an average of 11.5%, and now prices just made a 12% correction. I'm thinking in my head, this is a great time to start looking for selling opportunities once price starts showing evidence of sellers coming into the market. And we look at what's been going on now. We look at the Dow Jones. All right, this is why I like looking for selling opportunities, because we're coming up into an area of supply, but we also understand we're long-term in a weekly downtrend, right? These would be like long-term swing positions. We're in a weekly downtrend coming up into a weekly supply zone where the correction move has now surpassed the 12.5% and now is at 15.5%. So I'm really liking the idea of looking for selling opportunities, right? For sure, that's what the whole concept of multiple time frame analysis is. Let's look at a trending market, natural gas as an example. Weekly uptrend, price coming back up into weekly demand right here. We're in a weekly uptrend. A lot of buyers stepped in down here, so we want to be looking for buying opportunities when prices come back down in there. Price comes back in there. We look for buying opportunities. We go down to smaller time frames, and well, that's when we can start timing our entries for buying opportunities once we see the buyers stepping in, right? Removing these smaller time frame supply zones, making higher highs, and then buying inside these demand zones. That's how we would enter our trade. Now, if you don't trade like this, that's fine. We can look at indicators. You might be like, hey, I want to time it with indicators, Bollinger Bands, or Stochastics RSI. That's totally fine. We look at, say, the daily time frame. Where is Stochastics? Bollinger Bands, remove that. Stochastics. Go to the weekly time frame. Maybe on the weekly time frame, we might not be bouncing off of the bottom of the Bollinger Band. We kind of are, we kind of aren't, not too much. We're not like we're piercing through. But here on the stochastics RSI, you look, we are completely oversold, right? So maybe this is an indication of saying, hey, on the higher time frame, we are oversold. So maybe on my 1 hour or my 4 hour time frame, I should be looking for buying opportunities, timing my entry with the higher time frame of that being oversold, potentially a move going back up to the upside. It was the same thing with Aussie New Zealand, right? Here on the weekly time frame, we already discussed this. This is what the sideways range has been. Well, when it was up here in the supply, it was overbought and it was piercing way above the top of the Bollinger Band. Great time to be looking for a selling opportunity and sell this thing down. All right. Every other indicator you want to use, you could use it for any of these things. And say, for example, you want to use the 1 hour. Use the 1 hour because maybe you're like, I want to be trading on the 1 minute. Well, that's fine. Use maybe the 1 hour or the 4 hour as your highest time frame. Like in this case, Aussie New Zealand, we would be looking for selling opportunities up in here in this supply zone because hopefully if prices rally up, we will be inside an area of supply that made a new low in the market. It's also a good quality zone. It's also going to be reacting off of the top of the Bollinger Band. And we might also be overbought on the stochastics RSI. So that's just a bunch of little things that are stacking up in our favor. And that's all trading is. It's a game of probabilities to stack in our favor to hope that if we have more of these pros than cons, prices will do this rather than that, right? Keep in mind, even the best trade setups fail and even the worst setups will work. Now, I have a complete tips playlist on this. So if you go to my YouTube channel, click playlist, go down to tips, view the full tips playlist, and I have this whole course laid out for you, part 1, part 2, part 3, but also more on multiple time frame analysis if you want to learn more about that. Confirmation entries, how to actually enter your trade, how you should manage your take profit, stop loss, trade management. Scroll through this and then click the videos that you really want to watch. How to trade like a casino. These are all really good videos that I put in this playlist that have, I believe, like over like 1 million views combined all together. So you guys love that. I really appreciate if you guys check that out. And you guys can subscribe to my YouTube channel. And you guys can always reach out to me on social media at Moneyball Austin, Facebook, Twitter, Instagram. And I have no problem trying to answer your questions, whether it's multiple time frame analysis or trading in general. Okay. And I do offer a free little masterclass if you guys wanted to check that out as well at moneyballtrading.com. That will be in the description below. Well, I will also share with you my top tips on how to become a trader, why traders are losing money, what separates the profitable traders from the losing traders, and a bunch more bonuses your way talking about brokers, how the brokers are taking the opposite side of your trades. It's a great learning experience for all types of traders, new and veterans. So check that out. Like I said, you can reach out to me at any time. I'm going to let you guys go with that. Thank you guys so much. I really appreciate if you like the video. Helps me grow this channel. And as I know you guys want to see that happen. I will see you in the next one. Bye-bye. Cheers.